Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Sunday, June 12th, 3:52 p.m. New York time. Commodities. Commodities are raw materials that are used to produce finished goods, including agricultural products, minerals, ores, fossil fuels. In terms of financial markets, commodities are physical goods that are bought, sold, and traded in markets, distinct from securities such as stocks and bonds that exist only as financial markets. Got it? There's a big difference. Stocks and bonds are paper. Commodities are the physical products. There are four main types of commodities. Let's say categories. One, energy, such as your crude oil or natural gas, heating oil, ethanol. The other category is the metals. The metals such as your precious metals, gold, silver, platinum. And then your industrial metals, your base metals, like iron ore, tin, copper, aluminum, zinc. Okay, then you have your agricultural products. Your agricultural products also are defined as such as your grains, your corn, your wheat, your barley, your oats, and then your oil seeds like your soy. And within under agricultural, they include livestock, but they still call it a separate category, even though it's inside agricultural. So your livestock is your live cattle, feeder cattle, and hog. There's many more commodities. I'm just giving you the main ones, the ones that have the most trading volume. Yeah, there's coffee, there's cocoa, there's rice, there's coal, there's so many other ones. But again, just covering the main ones. So you got a basics understand what commodities are. So currently in the world right now, chili peppers used for hot sauces, spices. Yeah. When it's used at the manufacturing plant to produce it into the other products, well, there's a problem right now. It's been occurring slowly for the last few months in different countries, and now it's hitting the manufacturer. If you ever seen this product, yeah, this is a product. It's a hot sauce. It's a product manufactured in California. Many restaurants carry it. Many homeowners buy it, and it's been less and less available in stock in the grocery stores. Why? Because weather caused hot sauce shortage. Most popular hot sauce has suspended production until September after weather affect chili pepper crops. Yeah, well, that's common for the agricultural industry to be affected by weather. Too hot, could ruin a harvest. A drought could ruin a harvest. Too much rain could ruin a harvest. Let's go a little death. There's a certain season you plant your seeds, you plant your crops. If it's too wet, too muddy, that's not going to work out so well. If it's shortage of water, well, they're not going to grow as healthy and they might spoil sooner. And also the fertilizer they use to grow some crops, that might be higher price or shorter supply. Yeah, there's consequences. Population growth also puts more demand on for the agricultural. So let's go over here. This is the CME Group. It's the U.S. futures market. The U.S. futures market, past years, merged, bought with many other futures exchanges in the United States. So this is CME Group. Within the CME Group, we're going to look specifically at the financial markets, and we'll go to the charts. First, we're going to look at the agricultural, again, the commodities, agricultural, energy, metals. So agricultural, click on products, grains, corn and wheat I mentioned, also agricultural, oilseeds I mentioned, soy. Okay, let's go back now. Oh, let's stay there. Let's go down to include the livestock. So I mentioned livestock, live cattle, feeder cattle, hog. Okay, these are different subcategories: livestock, oilseeds, grains under the agricultural. Let's go to the energy. Again, another commodity, energy. Crude oil and natural gas. Yeah, there's many more. I'm just going the two main ones. Let's go back to the markets, back to the categories. Metals. I mentioned there's two kind of metals. There's the precious metals and base metals. Precious metals, gold, silver, platinum, and then base metals, your copper, aluminum. Now, so much more to go over, but that's the basics. Now you know more than most of your mainstream media chooses to tell you. Yep, and most of your financial analysts choose to tell you. So now we're looking at charts. We're going to first look at the energy charts, weekly time frame. Put it in perspective, price action doesn't lie, but your mainstream media chooses to do a lousy job, be it the radio, the TV, the print. Yeah. So crude oil, the symbol in the futures market is / all future symbols start with a forward / followed by the letters CL, crude oil. For the week, red, higher high, higher low. The trend is up. Coming into this zone, see this huge wick, huge shadow, huge tail. It's doing a retest in there. And look at that, above $120. Down here, demand zone, buyers. Up here in the past for sellers. So it probably is now that crude oil is here and it closed like that. That's a little body, high tail, low tail, wicks on top. Potential turning point. Yep, we may have a retracement or we may have a consolidation. Again, probability is that we're going to work our way up here higher. Might be a slow grind. So use caution. I would not be just jumping in a buy here as a swing trade. Nope. I'll be looking for potential consolidation or retracement before I would reload to the upside. Yep, but for the year, here's the high for the year. Here's the low for the year. Natural gas. Wow. For the week, look at that. Huge trading range. Unbelievable. High, low, and it closed in the middle range. That's a huge dragonfly, dodgy. Different names that candlestick's called, but interesting. Made an all-time new high for the year. And then closed back inside there. A little history here on natural gas. We're going to put it on a monthly time frame. Each candle's a month. And we're going to go to the max of data. That means the max that my data feed has available. All the way back from here, 1996. So here's natural gas, the high for this year. But it's not at all-time high. No, all-time high was back here. Back here. 2005s, they also had highs, 2008s. So it is unbelievable high versus all these years. Look at crude oil. Let's do that too. Put it on a monthly time frame. Put it on a max. The point I want to make here is that we're very close to all-time highs. Look at crude oil. Highs, we're not at all-time highs, but they're much closer to all-time highs than at the lows. And one would expect they continue to be going higher. Again, demand, demand, demand. Now we're looking at metals. We'll first look at the precious metals. Again, each candle's a week. Look at gold, green for the week, higher high. Zoom in, made a higher high, also made a lower low. came into this demand zone where buyers were and went back up. But notice smaller trading range. So this big red candle, all we did was retrace it from the bottom up, retrace it. And now we're struggling below that 1875 range. And we got a swing high here. So here we had gold consolidation, breakdown consolidation, still showing staircase pattern, lower low. Yep, we may still have another flush a few times to go lower. Silver, same thing, very similar, consolidation. Yep, there's a high for the year, there's a low, massive sell. So again, these precious metals are not at all-time highs, nor are they trending up. They're slow grind, and they're mostly in consolidation phases, past few week consolidation. Let's look at platinum. Is it platinum or palladium? How do you pronounce it? Don't know. Well, here we're in a consolidation phase. This is the supply zone seller, demand zone of buyers. It had a consolidation here, breakout to the upside. It's still struggling up here. Now we're looking at copper, which again is a base material. Why it's used huge for industrial use. Inside candle for the week. So most of the metals I showed you, or all of them, none of them did inside candle for the week. No, look, they all closed either above or below, or broke above or below the prior one, where the base metal closed inside. Now that's suspicious. So you see this arrow, this line I drawing down. Yep, potential going to have a retracement into this zone, which is a demand zone of buyers. Because we never took out this high. Nope, we had a high there, so I drew that as a zone. But we did close green, which is a solid body also. So we closed yellow inside candle, solid body, equivalent to a red. And we closed below this body. So I'm thinking it possibly more bearish bias. Like I said, go down here. Let's go into the agriculturals now. Again, each candle's a week. Candlestick. Looking first at corn. So what corn did last week, huge trading range for that prior candle. That prior candle had labeled midpoint. It went above and below it. So it closed. Look, similar there. Made a high till. So sellers up there. See in the bottom, no till, but the top till. So it shows there's sellers up there, supply zone. I already labeled the midpoint, which is interesting because we didn't make a lower low. So we might see further consolidation until we have a breakout or breakdown. Yeah, interesting. And now wheat, inside candle, indecision, hollow body equivalent to a green, but this looks like a bear flag pattern. So this was a huge candle, huge body, small wick. Again, we just may be doing a retracement lower until we come back further up to the upside. In soy, clearly a big difference. Again, corn consolidation, wheat consolidation. It's a trend. Soy is trending. So that's a strong trend to the upside. Took out the swing high, closed above, or took that out. Let's remove it. And also broke above this supply zone where sellers were, made a new high for the year, and then closed back inside there. So this is stronger. It's a stronger agricultural commodity than the corn and wheat right now because it's at all-time high for the year. Outstanding. Let's take it to a higher perspective. Or let's first look at here. So here's a supply zone there, potential retest on the downside. Let's just look at this for the higher time frame on a monthly. Since it's all-time high for this year. There we go. Not at the all-time high for all the years, but here's the all-time high for since I have the data of it. But it's nearing it. Now let's look at the agricultural under livestock. This is live cattle /LE live cattle. Again, each candlestick week. I've been sharing this event for past months that we're trending down. And as we were trending down, I added these blue lines. It was building a wedge. This is a pattern. This is called a bullish pattern because here was the trend up, consolidation, breakout to the upside, consolidation. And then this was a wedge, building wedge, took over time. And in that wedge, it was building a coil tighter, 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 tighter. And down here, 2 weeks ago, I put this yellow arrow here, showing that this may be the next direction as a breakout. Because again, this is a bullish pattern that was occurring. And that's what happened. Past Sunday night, we broke above here. And the edge of the week, we closed above it. Yep, made a higher high, higher low. The trend is up right now. It broke out of here. The risk here is, yep, it can start running up to 140. 140, if it closes above 140, we'll see if it takes out this weekly swing high and this weekly swing high. And this is beef, more expensive beef. Again, it's a commodity. Expect more expensive prices to reach down to the consumer level. You should peel back the onion and understand why these prices are going higher. Not all the prices are going higher, but some prices are going higher. Look at the food products they feed the cattle. Are those prices going higher or lower? Look at the energy costs to transport the food products to feed the cattle. Look at the energy costs to transport the cattle itself. Yeah. So there's several, like I said, peel back the onion. You're going to see there's other things that are causing this price to go up. Don't blame the cattle. Don't hate the cattle farmer. Don't blame the cattle. Feeder cattle, all-time high for the year. Again, not surprised. And now let's look at lean hog. Whoop. Red for the week. Lower high, lower low. Tested this midpoint and closed above it. I mentioned the past 2 weeks that I was thinking this was distribution. You can see the past videos I made. I was thinking these are dodgies and possibly distribution. That's what happened. We broke down, went lower low. And then midpoint, buyer stepped in. So this is now the demand zone. Still a selling up here supply zone. Many thanks for watching.